to the third edition of IRC's special series. Today I am in Washington, D.C., and I have the pleasure of meeting with Donna Alexander of BAFT IFSA. Let's see what she has to say. Hello, Donna.
Hello. Thank you for having me.
Sure, of course. What is BAFT IFSA?
BAFT IFSA is a new and old organization. We are new because BAFT, the Bankers Association for Finance and Trade, just recently merged with the International Financial Services Association. We thought it would be very helpful to use the acronyms of both organizations so people could have an immediate recognition of who had merged.
Okay. Are these members only from the U.S. or are other countries represented?
Not at all from the U.S.
Okay.
I'm glad you asked that question. We are not a U.S.-centric organization. That's an important point to make, particularly with this merger, because we have tried to move our agenda from the U.S. Historically, it started in the U.S., but it was very important. BAFT was very important for the Latin American debt crisis in the 1980s. Some of the agenda moved more towards the U.S. In the last few years, but then the board of BAFT said that we needed to have a global strategic initiative to really reflect what was happening in the economies around the world and to really reflect the membership of BAFT. And so we decided to launch this global strategic initiative actually before I joined about 2 years ago. We have always had members from around the world, but now our agenda really reflects that.
What are some of the challenges that your members have faced in 2008 and 2009?
One of the greatest challenges for BAFT and the IFSA was the crisis when it hit in 2008. And we really focused on the crisis, as we called it, the 3 C's. It was a crisis of confidence, a crisis of capital, and a crisis of credit. And obviously, attendant with all of that was the liquidity crisis. And so that was our biggest challenge, was to make the banks come together and rebuild confidence in each other so that business transactions could transpire. The biggest challenge was really educating the world leaders on what needed to be done in the world of trade finance so we could address the market dislocations. And we've had a great response from a lot of the multilateral agencies and from world leadership. The G20, the WTO, they've been very responsive to what we've asked for. So one of the biggest challenges was letting people know that we are out here and we have some people who are very interested in giving responses to the regulators, but not just responses, giving solutions and business solutions, not just solutions to regulatory challenges, but really giving solutions to how to resolve the economic crisis around the world.
Okay. The economic downturn of 2008 has brought up ongoing concerns for all when looking at more stringent auditing standards, specifically when you're looking at Basel II reserve requirements. Can you please provide your thoughts on that?
Sure. As many of our members and your clients know, the Basel Committee came out with some recommendations several months ago and put an April 16th, 2010 comment deadline on those recommendations. They were looking for input from the industry and from other stakeholders. BAFT IFSA did submit comments on April 16th. And in those comments, we included our concerns about the capital requirements that they were recommending and their recommendations on liquidity. I'd like to focus on the capital requirements, in particular for this part of our conversation. The capital requirements that were recommended for banks would have unintended consequences on trade finance, we believe. The capital requirements, ultimately, through some of the ratios that they would require, it would increase the capital requirements for trade finance by a factor of 5. And if you look at trade finance, which is short-term, self-liquidating, low risk, it's been around for hundreds of years. It's a very well-known transaction, very familiar transaction. It's part of the DNA of transaction banking, if you will. It's been around for a long time, so people are very familiar with it. And internationally, historically, jurisdictions that have undergone some upheaval, economic upheaval, have made an effort to preserve and at least restructure trade finance obligations. So that's how reliable and how necessary trade finance is. When we see in the recommendations that it increases capital requirements for trade finance by a factor of 5, we don't understand that. We don't understand the reasoning for that.
Mm-hmm.
We think it is unintentional. In fact, we believe it's unintentional. So we're in the middle of a major educational campaign with regulators around the world,
Mm-hmm.
including the Basel Committee, to let them know about the concerns that we see
Mm-hmm.
related to capital requirements.
Okay.
Now, some people would say, so it increases the ratio, the capital requirement by five times.
Mm-hmm.
What difference does that make? We are concerned that that could limit
Mm-hmm.
or dampen some of the economic activity, because that would make trade finance transactions more expensive for banks and then obviously for end users.
Mm-hmm.
And if that happens, at the same time, there's efforts to put stimulus into the
Yeah.
economy, to stimulate the economy,
Mm-hmm.
then you run into some problems. And I think what you find is that if you're trying to stimulate the economy on one end,
Mm-hmm.
but the regulations that you're imposing on the other side really make the types of transactions.
They hinder.
Yeah, they hinder.
Future
Thank you.
transactions, right.
They actually hinder
Mhm.
some of those transactions.
Right.
And we're concerned that the banks might either pull back or necessarily would have to cover their costs for it.
Right.
And then that would affect everything from large businesses to small and medium enterprises.
Right. Okay. At IRC, it is our desire to facilitate risk mitigation and structured finance solutions as it relates to international and domestic trade. Do you foresee members of BAFT IFSA looking more closely at this type of at trade credit risk mitigation tools, such as credit insurance, if they're not already doing so?
I am very well aware of the fact that there are many different options out there for banks to look at.
Mm-hmm.
I do know that many of our members are very, very, very interested in trade credit risk mitigation tools.
Mm-hmm.
We know that when the crisis hit, as I mentioned before, there was a crisis of many things. One of the C's I mentioned
Mm-hmm.
was confidence, a crisis of confidence. Some of the trade credit risk insurers might have been hesitant to take on clients in the form of banks and what they were doing with trade finance.
Mm-hmm.
I feel like a lot of that has eased. I feel like confidence is being rebuilt in the markets. So we're excited and anticipating a lot of availability of these risk mitigation products, because it will be important to make sure that trade finance really does become robust again in the global economy.
That is true. We hope for the same. To learn about this and other trade finance related topics, please be sure to visit our website at www.irc-group.com. Be sure to join us next time for another interesting topic brought to you by International Risk Consultants. This is Afroz Ali. Until next time.